Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is Deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the DealQuest Podcast. Let's get started. DealQuest community, Kupfer here. This is a solo cast. And listen, I want to delve into a little bit on some of the reporting and studies that have been done around the expectations on the M&A market coming into this 2025 year, and especially triggered by the elections and the new administration. I know I talked about some predictions in the past that were just sort of based upon my views, but there's been a study done I want to talk about. And, this is going to air in February. A lot of this is based upon research and surveys that were done more in January or maybe even late, but post-election, pre-inauguration. And I guess one of the points I want to make out, and maybe it'll bear out because maybe some of the things I'll be saying now, by the time this airs, there will be different indicators. But I guess in a way, and maybe there won't be, but in a way, that's sort of the first point I want to make. And that is that we make a lot of predictions. It's sort of like predicting where the stock market's going to go. And if you study about the stock market, I've ranted occasionally in the past about how these prognosticators and these people, it happens all the time in every outlet you can think of. They have somebody talking about why the stock market went up and down on a given day. And, I've always say they have no idea why it went up and down on a given day in most cases, right? They attribute it to factors that go in that direction, but it's not like those factors changed the next day when it went up and they triggered it to other factors. Well, the M&A market is not as volatile as that because it's not sort of on a day-to-day thing, but it is impacted by significant things. And, in the stock market, they talk about these black swan events or these significant events that significantly move the market one way or the other, and they're pretty much never anticipated. So all these things these prognosticators say are almost never anticipated. And I laugh because the folks that do tout that they got it right, whether they predicted the financial crisis, the Great Recession or whatever, probably if you look at them and you study all the predictions in history, they tout the one they got right, the big one they got right, but how many of the other ones didn't come true, right? So it's a little bit like that in the M&A market, although again, not quite as volatile. And the reason I raise this is because my sort of joke is, hey, it's very possible when I do anything that's reported, because we don't release right away, we have an airing schedule, that things could have shifted already by the time we get there by something unexpected, right? Some of the things we're going to talk about, I think, are relevant, and they are. It's not like what I'm saying is that it's a total crapshoot in terms of not being able to talk about anything that legitimately could have an impact, positive or negative, on the M&A market. But an incident could happen in between now when we're recording and when the podcast airs, and that incident could be significant, right? Whether it's positive or negative, whether it's war or whether it's resolution of Ukraine or what's going on in the Middle East, right? With Israel and Hamas, et cetera. If any of those things happen, those kind of geopolitical significant things can have a big effect. Or, if there's some big economic, look at the pandemic, there's a million things that can happen. Well, not a million, hopefully, but, there are significant things that we've had throughout history that can affect things. But outside of that, what I want to talk a little bit about is, this perceived impact of Trump's administration coming in and the difference between what, has happened under Biden, and then particularly about a KPMG survey and a much more less scientific poll that I did amongst the Deal Exchange, Entrepreneurs Organization, Deal Exchange community members. So let's talk about this. So first of all, what's definitely going to be different is the treatment of antitrust matters with the FTC, right? So under the Biden administration, this is generally true under Democratic administrations that tend to be more philosophically aligned with being careful about antitrust issues or enforcing antitrust restrictions more often and approving or disapproving more mergers, approving less, disapproving more, right? Mergers and acquisitions than generally under the Republican administration. So some of the deals that were blocked by federal courts or abandoned by the parties or that the FTC, was against, like various challenges that came up, were Albertsons acquisition by Kroger, which did not happen, JetBlue and Spirit Airlines, which did not happen, and that had significant consequences because Spirit ended up declaring bankruptcy later. And then Capri and Tapestry was also blocked by the antitrust division, having problems with it. With the change of administration, we would expect a lot less to go on restricting these kind of deals, these big mergers under NFTC, under a Republican Trump-led administration. Now, one of the things I pointed out in the past, I want to point out again, is that, remember, the FTC only gets involved in very, very, very large deals. And very large deals, although I do talk about them sometimes in the way that certain aspects of them and the increase of them or the lack thereof can also flow down into more middle market, lower middle market, and even Main Street deals. The whole FTC antitrust thing is just not applicable at small levels, right? It's just below the radar of where the regulation even comes in. So, it's how that'll affect the middle market M&A, is a lot less clear. But what also was found is just more so in terms of outlook. So, for example, and this is important, right? Because perception creates reality in some ways, right? It's why consumer confidence, for example, is often measured, right? Consumer confidence could be wrong or right based upon fundamentals, but it's a self-fulfilling prophecy in some ways, right? If consumers are more confident, they spend more. If they're less confident, they tend to not spend more, right? So they spend less and they hold back money, and that affects the economy. So the same thing about, confidence of CEOs, business owners, executives as to what they see coming could become a self-fulfilling prophecy in some ways. So, for example, KPMG conducted an annual end-of-year survey. So this is data that came in right through the end of 2024 of corporate and private equity deal makers. So, these are folks who do deals, right? Whether it's in-house, business development, corporate development, or other executives in companies or at private equity firms that fund many of the deals, especially at the larger level, and even in the middle markets, a lot of PE. They found that 76% of the respondents said that the election results would increase U.S. M&A activity. So 76% felt that it would increase it. 80% said it would increase their own appetite for deals, right? So it's not only their prediction for what other people are going to do, even a higher percentage said that they were more likely to do deals in the incoming administration. And that they looked at potential tax policy changes, being a boost to M&A. And 81% of deal makers thought that potential tax changes would boost M&A. And 79% said that, it would be an easier regulatory environment. And that's not just antitrust. So the thinking and the evidence of in the past, whether it was, under Trump previously or Republican administrations generally, is that in general, regulation eases, and that creates a perception of it being easier to do business, and in some ways, a reality, right? Of easier to do business, maybe less costs, and does increase, deal. So there were, definitely very optimistic numbers there. Now, whether that will play out or not, I've talked in the past about how I think maybe less so in 2025, because I don't know how much of it's going to be implemented and how it'll flow through the economy. But, it's possible, certainly after that, if truly there are significant tariffs and or deportations and the labor force is cut and there's a lack of labor, that those can create issues in a different direction, meaning be a damper, right, because of inflation on deals. But I think that's less likely to impact the economy, even if those things actually happen in 2025. There was another survey conducted by Teneo that found that 83% of CEOs and 87% of investors expect the market for M&A to experience a major return in 2025. So that's another, very positive survey that showed an even higher percentage of the players, right, more into the 80s and the 70s, the 70s and low 80s. These are mid to higher 80s. I expect that the M&A market will have a major return in 2025. And that's up from 68% last year. So the Teneo survey from last year thought it was 68% people thought it would be up. And the share of the respondents that expected significantly more M activity in that study rose from 17 to 37% among CEOs and 26 to 34% for investors. So both, the CEO community even more so, right? Up 20% from, more than double. And the investor community up, about a good third from 26 to 34%. So, and that survey also found that 86% of both CEOs and investors anticipate there'll be an accelerated pace of M&A activity under the Trump administration, and that 80% of CEOs and 74% of investors are predicting that the administration will have a positive impact on deals being completed. Now, it's interesting in these surveys that are based upon political and, policies that change significantly under different political parties, and you wonder how much of it is driven by politics. You just think, hey, if the people are in power that I'm more aligned with politically, I'm going to be more optimistic generally. And how much of that is actually tied to real data of what happens, under those policies. So we're not tying this back at this point to, any kind of historical checkup on what's been done. But, because there is this bit of, there is this clear history of perception equals reality until it doesn't, right? So meaning what I'm saying is this: these black swan events or these big events that could, happen in the future, or in theory could have happened in between when I recorded this and when it's being released, can very quickly change that, that outlook, right? If something, very significantly negative happens, I'm sure that the surveys prior to the pandemic or prior to certainly this I know for sure because these I've seen. If you go back to 2008, before the global financial crisis, before the Great Recession, there was a lot of optimism, right? And the surveys would have been very, very positive. And then, trust me, a year or two later, they were very, very different. So, there's no guarantee, but I do think that understanding, just like understanding consumer sentiment and understanding confidence and understanding outlook, does make a difference. And barring something that would significantly change that outlook of the CEOs and of the private equity firms, this optimism is going to drive behavior, and I think it's reasonable to expect that things will move in that direction. Whether it will be as robust as, these CEOs and investors in both surveys seem to think, then, we'll see. But I do think, it's pretty clear that that's the direction that things will be heading. And, and certainly there's some evidence from the past that deal flow, could very well go up. So it's interesting to look at this and then also understand, and I've talked about this before, that these are not only general numbers that are generally, first of all, who are the people being interviewed? They're PE and CEOs. They're not interviewing CEOs of, of some local company. They're interviewing CEOs of major companies. So all of this optimism, all these people that surveying, all these statistics are largely based upon the larger deal model. And as I've talked about, it doesn't always flow down, although general optimism about the economy and about availability of capital and about interest rates could flow down. And then also, the other sort of warning I always give is that about any kind of general predictions, not only that they might not come true as something could happen, but that you have to look at it industry by industry, sector by sector, geography by geography, because there are much more specific factors that impact any particular, especially middle market, and lower deal size, that are much more specific to that market or geography. And, those specific factors could be economic factors that are affecting a particular thing. Like, for example, if you're an exporter and suddenly there's going to be a trade war, okay, you may be a lot less optimistic about the positive aspects of your business. Now, by the way, that might drive a distressed deal, might increase distressed deals in M&A and other deals, but there are all those micro factors, and there are other things that can slow down. I'm recording this at a time when we're having these horrible wildfires in Southern California here that are, worse than they've ever been. And I know entrepreneurs that are affected. Well, listen, at a micro level here, somebody whose facility just burned down, or even the house just burned down. And unfortunately, I know people that's exactly what's happening to them in this last day or so. Right. The last thing that they're going to be focused on probably is the deal market and doing deals. They're going to be busy, first of all, making sure their family's safe and that they are safe and that they're rebuilding and that they can just even rebuild their business and operate it and survive. Right. So, on a geographic level, on an industry level, and certainly on a micro level, there are a lot of other factors that can come into play. But I think it is interesting to look at these macro factors and the positive viewpoints. And also, I would say this. whether it's being overly optimistic or whether it's being overly doubtful of this optimism, I think from a business point of view, right, it's a totally separate conversation about your passion for politics or your passion against or for a particular policy and, where you want to stand on that. And by the way, even if you want that to affect your business decisions, I have respect for people who say, hey, my values are my values, and I'm going to do it. I'm going to stick to whatever they are, and wherever you are on the spectrum, whether that hurts my business or not. But one of the things I don't like is when people have something that's subconsciously or unconsciously affecting their business decisions, and they're not doing it consciously, right? So there's a difference between saying, hey, I'm not going to take advantage of something because I don't like that policy from a principled stance. Okay, that's your choice, right? But if you are judging whether something is going to have a positive or negative effect, and that judgment is less based upon the facts of really whether it will, but it's more based upon whether you like or not like the person or the administration or the party that is implementing it, then you're probably, doing your own business a disservice, right? To not divide out your feelings about the people, the administration of the policy from the actual effect, economic effect in your industry or in your business, and where that can create opportunities or challenges for your particular business. I think it's incumbent upon us, for the benefit of ourselves, our business partners, if we have investors or shareholders, our employees, our clients, to try to have an accurate and clear-headed analysis and view of administration changes, of policy changes, of sentiment, right, and outlook, and that realistic impact on our industry and our business, so that we can most benefit all our constituents, all our key people, right, our employees, our clients, et cetera, our partners, our shareholders, our investors, in a way. And we owe that to be done independent of any personal view or upset or whatever, at least for the analysis. And then we can make a conscious decision on whether we want to have the things we believe in or the things we have a problem with, impact whether or not we make certain business decisions. But let's do that on a conscious level and not an unconscious level, and have a clear-eyed view of what we think is going to happen to the best of our knowledge and ability to determine that, and gathering some of this information about where other, executives especially on a bigger level, think things stand and where sentiment is, I think is a useful data point, piece of information, not to blindly follow, but to take into account in your analysis. So with that, I will end this week's SoloCast and wish you guys all the best in determining how these things may affect your deal decisions going forward for your deal-driven growth this year in 2025. And we'll be back next week with another great guest. Take care, folks. Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Megan and I, and my amazing team, just head over to kupferlaw.com. That's kupferlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your DealQuest will bring.